to Thursday. At Tackle Trading, that means Cash Flow Club, Cash Flow Vikings. Usually means an option expiration day the next day. Theta Thursday, we like to have fun with it. Apparently, the BLS like to have fun with the PPI report today. We'll talk about that. Earnings season about underway. Some mixed price action in the market. We'll break it all down for you, Matt. How are you doing today? I know the Masters is starting today. You know how I know that? Because I watched the halftime report yesterday. That's the only reason I know that it's starting today.
The Masters is starting today. It's already going, and I'm doing absolutely fantastic. I'm excited to watch the Masters, and I'm excited to break down this little hammer candle sitting at 5,200 here today with the crew as well. Give us a hashtag Team Tackle as you come into the halftime report here today, and if you love the halftime report. It helps you navigate the financial world on a day in, day out basis as we do our daily routine here on our Tackle Trading YouTube channel. Make sure you give us a like and share as that helps out the Google algorithm. So we're going to have a fun show here today.
I was chatting with one of my neighbors this morning, and because I watched the halftime report, I was like, oh, you watching the Masters?
Chat with your neighbor.
I do. I chat with all my neighbors. We're
That's
actually
fantastic.
we have a thing, and I was just like, you watching the Masters today? He's like, oh yeah, I can't wait. And I was just like,
I want to meet your neighbor.
I was like, well, my brother Matt helped me have that little moment of pleasantry. And then he went on about OJ Simpson dying. And
That's the other news of today in the sports world. The Juice ended up succumbing to, I believe it was cancer that got the Juice. But
needless to say, my neighbor had a lot more positive things to say about the Masters than he did OJ
I'm sure
Simpson.
your neighbor did, honestly. I'm sure your neighbor did. Where do you want to go?
Let's break down the technicals, Matt. I was watching CNBC yesterday, and they were dismissing the inflationary report left and right. Jim Cramer looked like he was on a drunken rant at one point, trying to find data that he liked. I got a kick out of that. But whether or not we resume, have a good update, earnings season, we'll turn to that here in a second. The technicals are not what they have been for the last 5 months, are they?
You mean the last 5 days?
Well, just the general. I mean, when I look
Oh
at this
yeah.
pattern, yeah, I haven't seen a pattern like this in 5 months, right?
Oh yeah, absolutely. I mean, yes, the end of the trend has occurred. Yes,
And
that's what we
that's what
were.
I was fishing for. That's what I
So
was fishing for.
yeah, but that was last week. So
Yes,
um,
we tend to be ahead of things.
the trend ended last Thursday. Is when the trend ended with the with that volatility based candle as we violated support, we violated trend lines. We talked about that. And in general, I do think you're looking at the technical condition from a short-term perspective against the backdrop of what's happening from a longer-term perspective. And when you look at the longer term, for example, you look at the weekly chart, for example, you don't have concern in the long-term charts. You have concern with topping action, but topping action does not lead to the conclusion of reversals. In fact, when you go through topping action, you topping meaning you're starting to see double tops on the daily chart. You're starting to see, the night, for example, the 5 EMA is given out a little bit this week. It might not close underneath that 5 EMA by tomorrow, but you are starting to see behavioral shifts from a technical perspective at the top end of the trend. When you do go through that in the top end of the trend, what's really occurring here is neutrality in the daily charts. And so you don't have a trend in the daily charts right now. You don't have a trend as of right now, bullish or bearish. You have neutrality. And in neutrality, you're kind of sitting on your hands a little bit from an aggressive trader perspective, a conservative trader perspective, trader versus investor. I think both have a little bit of a slight concern, but that slight concern is obviously coupled with the economic data that's coming out from an inflationary perspective over the last couple of months. We'll break down the PPI report here in just 1 second. But you have concern with the double dip inflationary situation taking hold, and that's the direct impact on the Fed monetary conversation. And you also have concern that, quite frankly, this has been a really, really powerful trend. It's been a trend that from the very beginning of that trend in November of last year till today, you're talking about a market that's up 1,000 points on the S&P 500 in 4 or 5 months. That's a really good year, quite frankly. You get this trend over a year and you're like, whoa, wow, I'm happy as a pig, and you know what? And so you've had a parabolic consistent trend here. You're starting to see volatility shifting at the top end of the trend. That volatility shifting is also based on the catalysts that have came out into the market that are concerning from an inflationary perspective. And so, like I said in the newsletter this previous week, I kind of feel like the environment right now is not set up, and I'm talking broad market here, but is not set up as we're going into earnings season to have strong opinions here. I don't think you should have a strong opinion on the market at the top end of a longer term trend with short term neutrality.
And that is better analysis than I heard on CNBC all day yesterday. I love that. I mean, because this is not likely the start of, CPI hot, right? This is still not likely the start of the next great bear market, right? I mean, that in having that opinion can think it, probably not going to resume the strength of the trend in the degree it was. Those are strong opinions. I doubt
my take on the market is going to be, creating trending environments out there on social media. I don't have a hot take on the market. I'm not.
You have a sensible take
saying, you know what? Oh my goodness, the double top out of there. Yeah, look out below. Oh my goodness. Oh man, the end of the world is going to occur here. And I don't have an opinion there. Oh, you got to hurry out there and go buy the dip. No, I think patience plays here.
Yeah, no.
Patience is the best thing to do as we go through the next couple weeks of the market. It's a good cash flow environment. It is not a good directional environment. Not as of right this very second. And again, this is more topping action from a technical perspective as we navigate a short-term neutral trend against the backdrop of an intermediate uptrend. For traders that have been around the block a couple times, this is old hat conversation. This is, Gino took a vacation this week for a reason. It's like, okay, volatility hit the market. We're going through some neutrality here. Let's take a walk on the beach a little bit here. I think it's important in one regard. The scenarios I see playing out here do not lead to a proper conclusion in the next few days regarding what the next leg in this market's going to be. And we haven't had this conversation for a while because we've been in the trend. And when you're in a trend, you just focus on the trend. You focus on the consistency of the trend. You focus on the consistency of the support levels. You focus on the consistency of the breakout analysis. And you're a little bit loose on your trading philosophy when you're within a consistent trend. When you come to the ending of the trend is actually the beginning of the next trend. And so when you come to the ending of a trend, you're going to have a new trend established. What you do not know, because the market's not going to stay neutral forever, what you do not know is the direction of the next trend yet. What you have to track is the differences between continuation patterns and what are known as reversal patterns. And we do not have enough data as of yet to make that determination. And so for anybody on CNBC or in the financial media that are coming out there with their hot takes are just full of hot air. That's all it is.
Yeah.
It's nothing really other than driving clicks. That's all it is. It's like, ooh, let's come out there and let's dump on the market, or let's come out there and let's buy the dip, buy the bid. You shouldn't trust that type of analysis. And so when you're looking at the market here, I do think patience plays, and I do think we're waiting on catalysts. And those catalysts that we're waiting on are not economic, quite frankly. They're earnings. We know the economic score right now. We know the economic playing field right now. We have an economically improving environment that is also coupled with an elevated inflationary environment with concern on the double dip inflationary situation. There's not concern on the economic side of the equation yet. There's concern on the consumer side of the equation as due to inflation and how that might impact consumer spending down the road. And, every concern on the inflation side of the equation would be what I would consider down the road type analysis. What is right in front of us starting tomorrow is earnings. And there's so many conversations in the market that are nonsensical. There's so many conversations in the market that honestly have no place in the market because they're not really real. They're just conversations we have over time. What is really real is what these companies produce, what they did in the quarter, what they produced on an EPS perspective, what they produced on a revenue perspective, and what they produce on a forward guidance perspective. It's that, not from an individual component perspective, but it's that from a macro perspective with the, the adding of all these individual components of how earnings season is behaving in the first week, second week. And by the time you get into that, third week, which would be the second week from a calendar perspective, you start to understand where the market wants to go a little bit more. In the last 5 trading days, we've had 2 big downs, 2 big ups, and 2 doji candles. Okay. Somebody give me a probability edge there. Anybody? Oh, wait. Anybody on any time frame? Anybody? Okay. Obviously, I'm being redundant there, but there's not an edge yet. And there's not an edge yet because we don't have a direction yet. And so in general, what I feel is really, really important to understand in this conversation is one simple thing. We are not here to catch a trade over the next couple of days. We're here to catch the next trend. The same way we caught the first trend here, and the same way we caught this trend here, we're going to be patient and we're going to wait on the environment until it opens up from a multiple time frame perspective on positive or negative catalyst. And at that point, we will react, not in front of that data. And so to me, I think it's one of those environments, Mark, where you're dealing with shifting volatility at the top end of a trend. You're dealing with some uncertainty in the marketplace, and you're dealing with a debate on what the central bank is going to do in the face of inflation. I think with those with those conversations being had right now, and coupled that with the kickstart earnings tomorrow, I think it's obvious you wait on catalyst in a better condition.
Yeah, no, and we're seeing for the second straight day. We go to XLK or the Qs. The Qs actually has a nice little chart bouncing off the 50, pretty cleanly.
Yeah, I'm gonna go the heat map on this one.
It shows, and we brought this up yesterday, and one of the questions you asked is what overperforms, and one of the areas that you said you gave us the choice on was mega cap tech, and Frank and I were immediate, like and we're saw it yesterday, saw it today. I think until you get that catalyst, right, as far as whatever it may be, it flight to safety, right, and the flight to safety in the new world is mega cap tech. So big, huge, gigantic moats.
Whether you agree or disagree with the fact that mega cap tech is seen as the safety of the marketplace, which is abnormal for any historical
from a 50, for the last 50 years, right?
The reality is in the last year and a half, it has been.
Yeah. And
multiple different times, by the way, and it's showing it today as well.
And it makes sense, right? Uncertainty when it comes to the specific inflation and interest rate policy. These companies have absolute insane amount of free cash flow, a concept that we're going to be talking about in an upcoming Decoding Buffett video.
It's a good one coming up.
Like these companies,
isn't it as simple as this? Like I think oftentimes we can make it complicated, but isn't it as simple as this? The size of the moats on these companies are so significantly large that there's just a generally accepted principle that in times of economic strife that the moat will play out.
Yeah, it's just that simple. Like I don't think this is a complicated analysis, right? But I think it's correct analysis in where to potentially look. Like the only thing that's going to damage these companies' moats and free cash flow really is a government comes in and seizes them, right? Breaks them up. Like that's the only thing that's breaking, right?
And that's the only thing I'd say to that is good luck.
And so, we're seeing that today. I know, right now I am being tactically careful in how I navigate this environment. I do know that if I do new plays, when I do, because eventually I will, could be a few days, could be a week, could be tomorrow. I probably will be conservative credit start. I'm going to look at, preferred area of the market, which for me is gold. For me, it's Bitcoin. For me, it's mega cap tech. A few others as well, but it certainly has catapulted up my personal rankings in the last 36 hours. So
So, so would you say in the last couple months we've been overweight materials, energy, commodities in general? Certainly not tech, but would you say that based on the conditions and what you're just saying right now, would you suggest alleviating some of the cyclical overweight in your portfolio and
yeah,
maybe
like I mean, yeah, that's exactly what I'm saying is that like
take
if you
some of
got
the gains from energy and materials and commodities in the last month, 2 months, and maybe park it in a little bit of big cap tech?
I think it fits the moment, right? I think it fits the moment. I think, when we look at, when you look at earnings, just the totality of earnings too, I mean, we've seen some great reports out of these companies. The environment this last quarter wasn't any different. And I just think it fits the moment, right? And so if you are looking how to balance different things, I think taking a look at
Well, it's interesting to me on a day where most of the market is down today, but the S&P 500 is green today, right? You're up what on the S&P, about 6 points.
yeah, I mean,
RSP,
you're
which
hanging
is the equal weighted, is down.
and RSP, I'm glad you brought that up because RSP's price action yesterday was the biggest divergence, right, in a while,
It
right?
also has the third stage of a head and shoulders formation going on right now.
And so I think this is pretty screaming clear, and we'll flesh out these thoughts. I'm
You're
sure
obviously seeing underperformance in RSP relative to the ES, and that's always, there's only one thing that can occur to make ES outperform RSP. Remember, ES and RSP are the same thing. They're the
they're
same
both
thing.
S&P 500.
Yeah, they're both the S&P 500. One is weighted, one is equal. RSP is equal, S&P is weighted. S&P is weighted to big cap tech. And so when S&P is outperforming RSP, same stocks, same everything, it's because big cap tech. And so, yeah, I mean, and you're not just seeing it in today, you saw it yesterday quite aggressively as well. The interest rate
And it makes
conversation
sense, right? It
forces that.
makes sense, right? Like as far as the price action that we saw in 2023, when there were moments of uncertainty, right, following the banking crisis, Mag 7 didn't give a crap in that environment, right? Everything else just hung out,
Yeah.
and
Well, let's
so
take a look at Max 7 very quickly here. Just from an overall technical perspective, very quickly, just to kind of, as we're talking about them, maybe get them dialed in from a technical perspective. Now, a lot of these companies do have earnings coming up. Apple's going through
that's
short term.
gorgeous. I'm sorry, that's the best I've liked it. Okay, it's gorgeous relative
I
to,
was going to say, like,
to the
gorgeous,
last 6 weeks.
gorgeous. I don't know about gorgeous here.
I got a false breakdown. I'm working with and a theme. It's the most I've liked it in 6 weeks. Let's just put it that way. Maybe 8 weeks. So
Okay, I do agree that I like Apple going through reversal analysis here as well, but I wouldn't be picking it up today. What or do you have a different take here? I know sometimes you're willing to buy a tick low. So
I would be willing to. I'm looking at ways now with protections, conservative, nibble, like
yeah,
nothing,
yeah.
like yeah, like all
Uh,
standard disclaimers.
Google down is getting downright froggy.
Yeah, no,
I
I
mean,
mean,
downright froggy here on the potential breakout on Google. And if you come out to a longer time frame, guys, this is not a small breakout. This is a massive breakout for Google. You're talking about that 155 level. That only looks like a kind of like a high base, low flag base pattern here. Again, you bring those out to the longer time frames. That's the all-time high price action. And so you're breaking out right now on an all-time high price action on one of their I forget what the creative wording of their conference was yesterday, but on an AI announcement out of Google. So that's looking pretty decent, quite frankly. Tesla going through reversal formations. I've been talking about this one for a while here. I got an opinion at 160. I got an opinion at 180, and my opinion gets a lot more froggy above 180 here. This is going to be an earnings conversation, most likely on Tesla. So keep an eye on that. But Tesla looks like a really good reversal formation. In fact, I would say Tesla from a pure reversal formation perspective, looks a lot better than Apple does, just from a
Yeah.
pure
Yes.
reversal perspective. Meta here, that doesn't look bad in any capacity. A little Cody special, short-term flag coming back down to retest that breakout channel, but that doesn't look bad at all. Amazon had Andy Jassy had his shareholder letter here today. I'll talk about that here in a second. But Amazon looks like a breakout here, and it's testing the all-time high. And in fact, I believe the wick is above the all-time high here today on Amazon. NVIDIA is not ready for prime time, neither is semiconductors in general. But if the last 2 days show anything on NVIDIA, it's that in an environment where we're talking reflation trade, the reflation trade is basically playing out here with NVIDIA, and Microsoft doesn't look bad at all. That's going to be a post-earnings conversation on whether or not it can break out at 430. But when you look at Mag 7, pretty much everything intact except Apple and Tesla, and both Apple and Tesla going through some degree of reversal. I think Tesla's a little bit further into the reversal conversation, but Apple could get there fairly quickly as well. I do believe both of them for me are going to be post-earnings conversations.
Yeah, no, and it'll be interesting to see the formations. I think patience, if you desire, but it makes sense. I think, and the thing about it is, I think you want to be careful with your average stock, right? In this environment.
I think you should be careful with everything. Like,
but
shifting volatility going into earnings season with potential catalyst out there. I think you should be cautious on everything.
But if you are like rebalancing things, moving some money around, not new plays, rebalancing, having a little more of the premium stuff, I think makes some sense.
I agree with that. I just want to be clear, like both Tesla and Apple for me is post earnings conversations, because like
go get some
reversals
Google
look
then.
good, but listen, I'm going to tell you right now, the stock market doesn't care about your technical condition going into an earnings report.
No, it does not. It does
doesn't.
not. And it's going to be interesting, Matt. We got earnings coming up tomorrow as far as the official kickoff. I know there were a few today, weren't there, that we'll get into here in a minute.
Oh yeah, we got some earnings today, but let's when do you want to do the PPI?
Oh no, I want to do that right now. I was just teasing. Let's get to that PPI report, and then we're going to go look at the dollar breakout. But PPI report. So we had the CPI yesterday, came in hot. We talked about it in depth. We'll talk about it in depth on the Trading Justice podcast this weekend. But it came in hot. We talked about it yesterday. PPI, the producer, came in today, and Matt, what did you find?
I found some curious data. That's what I found. This morning I read the PPI report, like the actual PPI report, and then I had ChatGPT summarize the PPI report for me. In general, I think you can look at the PPI report with a little bit of glass half full, a little bit of glass half empty. That's how I think you can kind of summarize the PPI report. If you're an inflationary hawk, there's some data in there that is certainly concerning. For example, the two data points that are concerning to me within the PPI report as an inflationary hawk is first and foremost, the year-over-year number came in at 2.1%. The 2.1% year-over-year is for a lot of people, they hear 2%, they're like, oh, that's in line with where the Fed wants to get. Not in the PPI report. The PPI report has been underneath 1% for a while. In the last few months, it's went from like 0.8% month over month, and now it's at 2.1% year over year. And so you're obviously having a bump up in inflation year over year within the PPI report that will bleed into the CPI report and typically keep that CPI report north of 3. And so the PPI report, two concerning data points are the year over year number at 2.1%. And then the second data point within the CPI report that I felt was a little bit concerning here today, and concerning in the sense that I don't get it. And what I mean by that is,
I think you get it.
No, okay. Well, I don't get the data point. Okay.
But I think you get it.
Okay. Yes, this is true. I do get it, but I don't get the data point. And the data point was oil, energy, and specifically gasoline in the PPI report showed a negative. In one regard, it was a negative 1.7%. In another regard, it was a negative 3.5%. In the last 2 months, we've seen nothing but energy go up, gas go up, oil go up. Gasoline prices in the last month are up 5-6%, just in the last month. And it's a different calculation. I will give you that. But I don't know how the PPI report shows a negative on inflationary expectations regarding gasoline and oil when the month over month numbers are actually up 5 to 6%. If you take into account the average of 5 to 6% in the PPI report, the actual year over year numbers would come into north of 2.4%. And so the two concerning data points were, I don't believe the negative energy analysis within the PPI report. They stated it was adjusted for seasonal adjustments.
How convenient.
Not only how convenient, but also completely full of nonsense.
It's just outright lie.
This is a positive seasonal environment for energy in general, and it's been that way for 20 years. So you're going to seasonally adjust and basically tell people like me that there's a negative in the PPI report regarding energy right now. I don't believe that. There's some parsing of that data happening in the PPI report. So there's two concerns. I do believe the takeaway is really simple though. This will put additional pressure and it's just another data point in the concerning double dip inflationary saga. And it's probably not going to change the central bank's thinking. They're laser focused on cuts one way or the other. Economic situations be damned, inflationary situations be damned. They're on the path to cut this year. It was fascinating. Now, Biden gave an impromptu little speech on interest rates yesterday, talking about how, it's going to be, they're going to delay the cuts. The inflationary conversation is going to delay the cut a month.
Like it's a team effort.
A month or so.
It's a team effort. And he was just letting everyone know that we might have to push that off a month.
Listen, I didn't hear it from that perspective. He talked about how it's the central bank's decision and the central bank is going to do this. But I did find it fascinating that in the same sentence, we talked about how we're going to have to push off the cut for a month or so, but we have a plan to combat inflation, and that's going to be cutting interest rates. I was like, okay, we're fully on board in election season.
They do not care about inflation. This is about the 2020.
They do. They absolutely care about inflation. I think I would disagree with the statement. I think they do care about inflation. I just think they care about other things more importantly than inflation.
Okay, fair enough. Right. Yeah. Fair enough. They care about other
things. By the way, I think we said the exact same thing, by the way.
We did. Yours was just
more diplomatic.
Yeah, I am looking forward to Jay Powell's next the Fed is politically independent rant that he will go on. So I can roll my eyes as far into the back of my head as they possibly can go. But you know who also didn't believe the PPI report this morning? Yields in the dollar. Let's go over to the dollar. They didn't believe, yields up, dollar up. If this was the great disinflationary report, you might have see a continuation of breakouts of both charts today, but they didn't buy it. Dollar's breaking out. That's not good for a lot of things, Matt.
You know what else didn't buy it? Gold.
Yeah, gold don't. Yeah,
gold didn't buy it. You tell me on a day where the PPI report is a miss, dollar's up and gold's up simultaneously on the day when the PPI report's a technical miss. Not a chance in the world the market bought that PPI report.
Yeah, but it makes good headlines. But dollar breaking out, Matt. This
does it make good headlines? Does it?
Well, no, I don't know if anyone's even buying it anymore. I think they need to change their strategy. Get more economists out there telling you.
They have manipulated the inflationary data within the CPI and the PPI report for as long as I remember analyzing economic reports. They are outlandish with the manipulation of their reports right now.
Yeah, it's pretty bad. It's pretty bad. And they didn't buy it, Matt. That dollar can put some pressure on things, in lots of faces. As you looked in the gold chart, gold's like, I don't care. Once again, another day that ends in Y in gold, ignoring all of this stuff. right? All of this stuff. But that chart can put some pressure on other commodities. That chart can also put the pressure on the market. If that was a stock, man, I like this because this is your game. If this was a stock, would you be buying it?
That's a confirmed breakout against 105 yesterday with the continuation follow through here today with the wick at 105.5. The avenue be targeting 107.
Yeah, and so it's an important chart to follow, right? It's an important chart to follow.
Um, it's a vitally important chart to follow. I doubt I'm going to get more froggy in the market, like in terms of the bullish analysis, until we start to see this simmer down.
How can you? I mean, we've seen that, and now
I don't think you increase your bullishness at the top end of a trend in the face of a dollar and yield breakout. No, I don't
it's
think you
just that
increase your
simple.
bullishness there.
It's just that simple. And
Going into earnings season, like, no, it's caution.
and go over to crude oil. Now, theoretically, these things can put weight on commodities. We've looked at gold and it just does not care. I mean, gold is going to do what gold does. Crude oil, down a little bit, breakout dollar, taking a break. But Matt, if this thing trades sideways for a few more days, I mean, you're setting up for a breakout, aren't you?
Yeah, I mean, you would have to clean it up, and it definitely would have to shake off some of the up and down nature of crude oil over the course of the last few days. You got a big up, big down, big up, big down. That's tough to trade on. There's no doubt about that. You would need to get that cleaned up. The one thing that does seem pretty clean is 87. And so let's see if we can get 87 cleaned out. But yeah, if you clean it up and you start dialing in that 87 handle, that's where the resistance level is on the pivot point. We got a couple weeks north of 87, but you're always going to have wicks on the global market type commodities. So yeah, I think you could be looking at that as a potential breakout.
Yeah, no, and obviously an important chart. This whole commodity universe are important charts from a macro perspective these days, right? Because if that chart does break out, well, and this is the thing, you and I tend to be ahead of the market on big conversations. You and I started really hammering on the Trade Justice podcast over a month ago. The gaslighting, the inflationary conversations. We've been talking about it in depth all year.
The reality is we have conversations today that the market's going to be having in 2 weeks from now.
It is just that simple.
We do it all the time on the podcast. We see it all the time.
And if this chart, but no longer is inflation one of these conversations ahead of time. It's on people's minds today. And if that chart breaks out, you're not going to have many people not paying attention to it. So,
well,
unless the BLS can seasonally adjust the chart. All right.
I guess my point is the chart doesn't need to break out to have concern on the inflationary side.
Yeah. So go over to Bitcoin. Bitcoin holding up too, having some Mag 7 gold. I put it right there in that environment these days. Right now, you're close enough to the breakout level. I don't have options on IBIT, so I can't do anything anyways. I mean, you're just waiting for a breakout at this point, right? You're just waiting for a breakout at this point.
Yeah, the analysis hasn't changed in the last 2 weeks. It's not going to change today.
Yeah, and if I was holding Bitcoin, I would continue to hold it.
I don't have an opinion on the long-term side of it. If you're an investor, you're an investor.
Nice price action though, following CPI. Let you know it's kind of its place in the sentiment. Saw an update on the CPI when other things were under pressure. Gold and Bitcoin, you're on the same team. You're on the same team. Don't forget that if you have a preference of one over the other. All right. We are going to probably, in coming halftime reports, stop about 15 minutes earlier because we're going to have a flood of earnings coming up. Earnings season starts, Matt. Will you just talk for a minute before you get into individual stories about where we're at in a narrative standpoint on the big picture and how earnings kind of fits in here on the importance and narratives that can
honestly form? I think I've talked a lot about that. Honestly, I don't know how many times I can say this is going to be an earnings conversation. That the everything we're talking about today in the marketplace is going to change tomorrow when we start getting the financial earnings reports, and that's going to change as we get Taiwan Semiconductor, Netflix, and Tesla in a week and a half from now. And that will change once we get into Mag 7 week and we start to get big tech week, and that will change when we get into retail week. It's when you're going into earnings season, you're always going to have a little bit of concern just to see the variables play out. When you're going into this earnings season, after that parabolic uptrend, going through a double dip inflationary perspective, earnings is going to be an absolutely vital catalyst. Somebody asked me a question in Discord yesterday, and I said, the Bears don't need earnings, the Bulls do. And
that's so spot on.
And what I meant by that was when you're at the top end of the trend, you need further catalysts to continue to propel that from going higher. The Bears have all the argument they need right now. They don't need another argument. They just need a violation of support and they'd be perfectly fine. The Bulls, for this trend to restart and for a new leg to emerge, you are going to have a positive earnings conversation. Without a positive earnings conversation, the market could go stagnation for throughout the entire earnings season. Without a positive earnings season, you could see the bear argument take fold here. And so I do think that it is vitally important to see earnings, given the fact that we're at the top end of the trend and we're having a monetary policy. Will they not raise interest rate, not raise, but cut interest rates? We're having a double dip inflationary conversation. What can kind of change that conversation is you get a rock star report out of Taiwan Semiconductor that all of a sudden the only thing people want to talk about is the growth aspects of Taiwan Semiconductor, or you get the Netflix report where their subscribers are up through the roof, and it just sparks the bullish mentality again. What I'm saying is you got to have a growth argument here to continue this current trend. You got to have a growth argument, and that can only be provided at this point from an earnings perspective. And so earnings is going to be absolutely vital this time around. Now, do I say that every earnings season? Yeah, I have, and I'll say it next earnings season too, because that's how important earnings is. It is vital every quarter to understand the companies that you're investing in, what they're producing from an earnings perspective. It's vitally important to understand the lay of the land from a macro perspective. How is the entire market summarizing earnings? Is earnings improving from a market perspective? Is it deteriorating? We know the score going into it. Anybody that watched the podcast this previous week knows the score going into it. We did the earnings preview in the podcast. And so definitely check that out, as I did that summary there in the podcast. As of right now it's a matter of navigating it. Earnings starts tomorrow, so let's navigate it pretty much. Now, I got a few stocks in the news here from an earnings perspective, as well as just the stocks in the news today. But Team Tackle, this is the time where you should put in your stocks that you want me to break down from a technical perspective in our rapid fire section as we end the show here today. So if you want a stock, commodity, currency, anything you want me to break down from a technical perspective, go ahead and put that into chat, YouTube chat. We'll break it down after we get done with stocks in the news here today and earnings roundup. And when we're talking about earnings roundup, we're going to start with STZ here, Constellation Brands. Constellation Brands, and for those of you new to tackle trading or watching this later on today, finding us, make sure to like and share, and make sure to subscribe to the channel, as we're going to do this every day in the halftime report. We're going to break down the most important earnings reports every single day. We're going to break down their raw numbers. We're going to break down their and the raw numbers would be three things: EPS, revenue, and forward guidance. Now, one thing you will hear from me throughout the quarter earnings season is you will hear me say the word hat trick. Now, if a company pulls off a hat trick, that's when they have a significant beat on EPS, a significant beat on revenue, as well as an increasing in forward-looking guidance. And so when you hear that hat trick, that's and I think last quarter there was only like 5 stocks that pulled off a hat trick. By the way, I will be tracking earnings roundup and the progress of earnings from a macro perspective every single week in one of the sections in the Tackle Trading newsletter as well. So if you want to make sure that you get those macro updates in the newsletter, check out the Tackle Trading newsletter every single week. We release it every Saturday, every single week. Now, with that said, Constellation Brands. They came in at 226. EPS expectation was 210. So we're going to start Constellation off with the beat on EPS. Revenue also beat the 2.1 billion handle with a handle at 2.3 billion. That represented 7% revenue increase year over year. They were not done there. They had a slight bump up in EPS. They went from 328 expectation for the year. They increased that to $13.65 for the year. Now, I'm not going to give the hat trick because I was not impressed enough with the veracity of the beats. I do take into account low bar expectations in my analysis, guys. I don't judge earnings reports based solely on the did they beat or did they not. I judge earnings reports based on the veracity of the beat and historically how much did we drop that bar going into earnings season. We dropped the bar going into earnings season by about 2.83% here. So decent beats on the EPS side, decent beats on the revenue side, and an increase, slight bump up in EPS. Good enough to see a gap up, not good enough to break out and run against the market. I'm willing to bet if the market was a little bit, in a little bit more of a bullish mode, you would actually have seen a breakout here. Now, when you're looking at Constellations, this is a liquor company, by the way. When you're looking at Constellation Brands here, you got an old pivot here right around 273. The wick did try to test up above that 273 handle, but that's where you're probably anchoring against on that potential breakout analysis. You dial this in for a longer term time frame. That is an all-time high breakout. You could see some dialing in that potential breakout on Constellations, but if Constellation is on your radar, well, they got a good earnings report. That's number one. Investors are going to be happy about that. Let's see if we can get a multiple time frame 273 resistance breakout dialed in on Constellation Brands. Moving on, let's talk about Fastenal here. Not a good look out of Fastenal here as they gap down and hammer down here on Fastenal as they came in with a slight miss. 52 cents against the 53 cent expectation. Revenue also slightly miss as well, coming in at 1.9 billion. The expectation was 1.92. Revenue did go up 2% year over year. This is not this is a cautionary tale.
Yeah.
Fastenal is a cautionary tale. And what the cautionary tale is, and again, we need to see more in earnings to see any trends or themes that develop, but you're at the top end of a trend going into earnings season. You had slight misses and the market punished you. That is not stuff we saw last quarter.
No, at all.
We didn't see this last quarter. Now, last quarter, we were also coming from a lower point on the chart on almost everything as well. Expectations do matter, and expectations are not just based on what the market expects from a raw number perspective, but is that bar high? Is that bar low? Well, the higher the price, the higher the bar you got to overcome. The lower the price, the lower the bar you got to overcome. And so it's a little bit of a cautionary tale here on slight misses here out of Fastenal with a gap down and sell down behavior. It does have support right around that 70 level. So if Fastenal is on your watch list, 70 is a really important number. Keep an eye on that because you got an old pivot point here. You also got the rising 20-day moving average, which acted as a support level as well here today. And so keep an eye on that. You could see some proper development from the bullish side of the equation right around 70 because you do have an overreaction. In general, I believe you have a slight overreaction to the earnings news here today. Again, a little bit of this was environment, a little bit of it was you're elevated in price and you didn't impress on earnings. But again, 70 does stand out from a support level. So if Fastenal's on your watch list, track that 70 handle. Next in the news, CarMax from an earnings perspective as well. CarMax comes in. Now, unlike Fastenal, Mark, which slight miss.
I think I'm seeing more gap downs on earnings in the last two charts than I saw last quarter.
That's outlandish, but yes, slightly. a little bit. CarMax here today, 32 cents against 45-cent expectation. That's just a really bad miss on CarMax. They also miss on the revenue side of the equation, 5.63 versus 5.88. Revenue down 2%
You can't
year
be
over
a
year.
consumer-facing company and have those numbers. You can't.
Going into a double dip inflationary situation on used cars?
No.
No. No, I think the market got this one right on CarMax. I think there was a little bit of an overreaction on Fastenal. Constellation looks perfectly fine. But I think CarMax is right. My general take here, Mark, is last earnings season, they had the bull goggles on. There's no doubt about that. We were in a developing trend. Once the economic conversation kind of got settled in a little bit, that gave the market all the reason they needed just to buy anything that was even remotely a slight beat or even in line. And again, we're not even into earnings season yet. That's tomorrow. That kickstarts tomorrow. But you talk about the three companies here today that reported earnings. I can't argue with the market that much on the reaction. I can't argue with Constellation. STZ gapped up. They should have gapped up. They had beat and an increase in guidance. They should have gapped up, but does Constellation have the ability in this environment to gap out and run away from the price action without proper development? Probably not. So I kind of feel like the market got this one right here. You look at Fastenal, and yeah, was it maybe a slight overreaction? Yeah, but technical analysis and algorithms can do that fairly quickly. So yeah, maybe it's a slight overreaction, but in general, I would say you come in line against the top end of a trend. In the quarter, you're up 62 to 78. Going into the print, you were at 74. So you're up over 20% in the quarter, and you come in line. I'm sorry, if you're up 20% in the quarter and you come in line on your numbers, you shouldn't have been up 20% in the quarter. And so giving up a little bit of those games makes some sense. And then when you look at CarMax here, again, just kind of speaking kind of what typically is the case. If you miss substantially, and they missed by about 20% here against the expectation. So if you miss substantially like CarMax does, and you don't gap down and sell down, like what are we doing on earnings then? Like if you're not producing, what are we doing on earnings? So it felt like a pretty normal earnings environment here today. Market expectations were a little bit elevated given the fact that trends are elevated. But in terms of the overall price performance on the earnings, I think these are three examples of more normal pricing from an earnings perspective. I thought last quarter was a little bit abnormal, honestly.
Yeah, no, and
your thoughts in general on these three earnings?
it makes me like Mag 7 more. Like, I mean, I'm being totally serious. I'm like, I see Fastenal, I see CarMax, I see pretty good punishment, maybe warranted on one, not as much overreaction on the other. I see Google breaking out. I see Apple taking off today. I see the price action. I see the theme that makes sense. It makes me like mega cap tech more. I mean, that's really what it does, to be honest. So, I want to be really cautious outside of those preferred areas in the market. And so if I owned stuff at the top of the chart that was maybe cyclical oriented, right? I don't know. Everyone has to make their own decision, right?
Well, but let's dial that in though. Are you talking more of a trading perspective, or are you talking?
No, I'm talking investing, right? I'm talking investing. But if I was looking for trades, it would be in the tech too. Like, if Google breaks out of its resistance level, I mean, that's the type of trade I wouldn't be afraid of, right? That's the type of trade I wouldn't be afraid of.
I don't necessarily disagree with your overall statement. I would say these three examples before we even get into earnings season and see where the catalysts are, that would be a little premature to me.
Mm-hmm. Yeah. I tend to be a confirmation or two. Sometimes I'm right. Sometimes I'm wrong. I tend to be a little more aggressive.
A little premature, but outside of that, a couple other stocks in the news. FCX got an upgrade yesterday. forgive me, but I can't recall off the top of my head what bank
Well, they didn't use blue chip copper, so I don't care who they were.
No, they didn't. They got it. They got another one though. It was from some other bank, but they didn't use blue chip copper. I'm trying to think about what they stated. I found it cute. That's why I wanted to bring it up again. You're also, as one bank starts upgrading, what do the other banks start doing?
Of course, we know
They
the
start
game.
upgrading as well. So they got another upgrade as well. Amazon was in the news here today as Andy Jassy releases his annual shareholder letter to Amazon investors. And basically, in general, I'll just give you a quick summary of what Jassy talked about. He talked about the efficiency of cost-cutting measures, a little bit of meta-like, I would say there. Very dry newsletter, very dry newsletter in my estimation. Did not have the pomp and circumstance that Bezos loved to do every now and then in that newsletter, but very, very dry analytical type newsletter. So not a lot of pomp and circus out there. He also talked about
Dude, there is nothing wrong with a left brain nerd running a company. Things usually go well.
I have no issues with left brain nerds running companies. Zero, 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 zero. But he also talked about investing into AI. He talked about generative AI specifically. He talked about improving conditions on the infrastructure of AWS as well. It's not going to be one of those newsletters or shareholder newsletters letters that people talk about outside of today. But it did show me that there's serious people running Amazon right now. And so not a bad newsletter. Obviously the market is liking what they heard, but I think more than anything, the market just likes Mag 7 today.
Yeah, I think the market likes Mag 7 today. Yeah, so
all right, that is all the stocks I have in the news, Mark. I'm going to hurry and do a little bit of rapid fire. So if you guys have a stock you want me to break down on this Thursday edition of the halftime report, go ahead and put that into chat right now. Let's talk Majid. You put in Snow out there, and you said Snow is almost like Apple in terms of its support. In terms of support, yeah, I do agree. I also agree in terms of the patterns that are starting to develop. The only thing I would say different, and I think you would agree with this, Majid, is the positioning of where the reversal is coming from on Apple is, obviously more elevated than what is happening more on Snowflake here. Snowflake, when you look at it on a longer term chart here, you got a lot of support right around that 140 level. Just
yeah,
a
you do.
lot of support around that 140.
A lot of support in really difficult market conditions, right? You're talking about the pressure of 2022. You're talking about the October lows of last year, right? Some of the most volatile times in the last couple of years, and it held support. Right?
And you do, and you also have a slight improving longer term situation here. Is this pivot point on the monthly chart is higher than where the base of the reversals were. I don't have a strong opinion at 160. You got overhead at 200 and a lot of moving averages. I would love a clean 140 reversal, honestly, but I'm not sure you're going to get it. It's starting to show reversal at 150. So I don't have a negative opinion here. I think you could see some trading setups in front of, based off that reversal, maybe above 160 here on the aggressive side of the equation. Longer term, my opinion would be at 140, but it's a lot of wide range volatility here on Snowflake. And so it is developing support. It does have a lot of support underneath the price action, not at 150. It has a lot of support at around 140 though. And so keep that in mind there, Majid. William with ADM here, Archer, Daniels, Midland here. Now Archer has earnings coming up, but I like the overall technical story that is being told here on Archer there, William. You look at this on the daily chart, you're coming through a W formation here. Obviously, earnings kind of blew that W formation out the water, had a really good secondary pattern, and now you're up here towards the high price in the quarter. You got earnings coming around the table. But when you're looking at this story, you always want to look at these stories on a little bit more of a longer term time frame as well. And this is an improving condition coming from the ultimate low point here, William. I like Archer Daniels. There's a couple food-based companies and food-based chemical companies in basic materials that are looking very Archer Daniels like. Mosaic is another name that comes to mind. Not MOOS, but MOS is another name that comes to mind, going through a little bit of reversal formations in those type of names as well. Looking forward to earnings on both of those, but both of those seems to be going through. Archer a little bit more in front of Mosaic in the reversal, obviously, but both look pretty decent going through reversal analysis. Majid, looking at ARM here. ARM has not been on our radar for a while from a short-term trading perspective. Obviously, we break it down because it's a major component in the semiconductor and the AI conversation. But ever since this earnings report, it's really kind of been off the radar, given the fact that just a lot of volatility here never really gave us that good secondary pattern to anchor against. And then it's just been a lot of neutrality here. I don't see a trade on the bull side here, quite frankly. Anything on the top side, you're just running into a lot of nonsense over here. I do see a concerning data point on the downside if it does violate 120. If you do violate 120 here, the base principle of this consolidation at the top end kind of loses that muster and loses that argument. And you entered into a pretty significant pocket on that weekly chart, given that the bullish upward movement in price was really kind of dealt with on its previous earnings report. And so I got a little bit of concern on ARM. I like the company. I got a positive opinion on what ARM is doing, but in the short term, just a lot of volatility on ARM at the top and a little bit of concerning 120 support level. If it ever does give there, could see a quick journey, down to 100. And if it does, I might have a stronger opinion on the bull side, quite frankly, if we get a little bit of a lower price threshold there. Hopefully that helps you, Majid. Apex VK. I love you, Apex. You always give me these off the radar ones. I like it. Vikings Therapeutics here. VK TX here. Sell put credit spreads, some call spreads. Okay, I'll break both down very quickly, rapid fire style. I think you're perfectly fine selling a credit spread in this type of condition. You got it as a symmetrical triangle. The only thing you would want to ensure when you're selling that credit spread is to identify that key level of support you want to work for you. And I think it's $60 here. So for me, if you're looking at if you're looking at a credit spread here on the bull side of the equation, that would be a bull put type credit spread. You can go down to a 20 delta contract right here. Not great options. They're just not great options for a credit spread. But if you could get in, maybe single order it in, maybe you can tighten up that bid-ask spread. I wouldn't recommend a credit spread based on the range of the bid-ask spread here. But if you did, I would look at that $60 price threshold as that support level. And I think that's the key point on any credit spread is you want to anchor against a support level, not just a delta number. You want to anchor against both delta, which is your strike price, as well as a support level. You always want support to work for you. I don't care if you're a delta dog or a theta king or queen. It doesn't matter to me. You always want support to work for you. And so when you're selling that credit spread, just make sure to identify that level that you're willing to do. On Hum, obviously Humana here. This credit spread probably wouldn't be the case here. You're tied against earnings, and unless you're going to maximize your range and take into account the market maker move, you don't want to hold the credit spread through earnings unless you know how to do that. And I'm not going to break that down on the halftime report, but hopefully you do understand that one there. Is CCJ URA talking about a little bit of uranium here. I know Coach Mark has an opinion on uranium right now. Uranium looks to be breaking out here, quite frankly. That $50 handle is the handle that we need to track, and most likely you see a weekly close above that. That would be a little bit of a behavioral shift.
Yeah, I am really interested in things on yesterday that showed relative strength. Like Nvidia showed relative strength.
CCJ here today.
And so that, where buyers came in the midst of volatility, really good volatility, right? So
yeah. The only question I have on CCJ here is the weekly chart we haven't seen a close on the weekly chart above 50. We have seen that candle on their previous earnings, gap up and close above 50. So the only question is, are you going to discount that? If you
Mhm.
discount that, and we discount things in technical analysis all the time, but you got to have a reason. There's got to be logic behind it. The logic here would be volatility on earnings, gapped up close, came right back down. You discount that, because you're clean above 50 right here. And so if you can discount that, and you close above 50 here, I think it would be easy. I think you're looking at an entry above the high. You get a stop loss underneath the 5 EMA here because of the volatility. And you just basically take a little bit of risk to the top, to the downside, while you got a little bit of an open air to the top side. It's more of a momentum trade here, I would say, is than absolutely anything on CCJ. Now, when you're looking at URA here, this is the uranium ETF here, not nearly as clean as CCJ. CCJ's got that real clean trigger right above the high of the day, especially if you can discount that. And again, that's a subjective conversation. That's not one for me to say if you are going to discount a data point from a technical perspective. But if you do, CCJ does look a little bit cleaner to me on a trading setup than uranium itself does. Uranium's kind of punching up here, and it certainly does look like it wants to go to 32, but doesn't want to go above 32 is the ultimate question. CCJ is showing the fact that it can go above 50. Whether it stays above 50 is a different conversation. We haven't seen that yet on URA. I like the momentum a little bit more on the trading side of the equation on CCJ versus the choppy flag based pattern that we're seeing, that you would have a little bit more front running mentality on URA versus CCJ. What about you, Mark? Which one on URA versus CCJ do you prefer, and why?
Now, I own URA with from a credit perspective.
Mhm.
I've owned CCJ before. I tend to like diversified things. Like I tend to like GDX better
Which
than I
one do
like.
you like to cash flow more on, CCJ or
CCJ
URA?
is a better cash flow instrument. The bid ask
Well, you
spreads
can
are
always get better premiums, yeah,
yeah, better premiums. The bid ask spreads are a lot easier to
a lot
navigate.
cheaper
CCJ is the biggest North American uranium miner, and it's by a sizable
by a
amount.
mile.
And so that blue chip uranium play. There's only really one big, large cap uranium type miner, and that's CCJ. So you're going right to the source, but uranium, some froggy price action, some froggy price action.
I like it. Talked about this one yesterday, D, but I'll talk about it again because at no point will I ever get bored talking about gold-based instruments here, and specifically covered calls within GDX. My opinion is I feel like GDX has a target right around 36. I do believe that the ultimate conclusion of this trend is about 36, but I also cannot see it above 36. Not from a technical perspective. There's just so much at 36 that I think you got to be concerned about. And so I think it's dealer's choice here on GDX on the call side, on the covered call side. I think in general the momentum says don't cover. I think in general, the trend says don't cover. I think in general, the volatility says it's debate. And so the trend, the pattern says don't, the momentum says don't, the volatility says maybe, but to me, I kind of feel this is a 36 conversation. So you could easily go to the market right now, go out 36 days out and cover at 36 and be perfectly fine as of right now. Yesterday, when I was talking about that conversation, it was a 30 delta. Now it's a 35 delta. You're getting about 20 cents more on the covered side of the equation because the price is a little bit higher today than it was yesterday. And so I'm uncovered. Mark's covered. Mark's still trying to figure out what he wants to do with his covered. But I'm debating 36, but I don't feel we've given up the momentum enough yet. And I could regret this. If we get a big red candle down tomorrow, I could regret this very aggressively. But I want to see a little bit more shifting here. I got an opinion at 36. So if you are covered, I do think it's important to cover at resistance. The same, and it's a very similar conversation to support working for you on a credit spread, right? When you're selling a bull put spread, you want support to
You
work.
want support.
And when you sell a covered call, you want resistance to work for you. And so for me, it's right in line at 36, where you can basically say, let me sell at 36, meaning the covered call. Let me sell the call at 36. I can take the growth from the current price of 34.16 to 36. And if it ever breaks out of 36 in the next 35 days, then obviously I'm giving up any gains above 36, but I'm locked in at 36. I think that's a way you can get your cake and eat it too there on GDX, where it just the condition of where the price is currently in relationship to the double top at 36 with the current momentum. I could see a scenario where the trader says, you know what, I'm going to cover 36, take the momentum from 34 to 36, but it alleviates a little bit of that pressure. And so honestly, the more I talk here, the more I might convince myself to cover at 36. Thank you for that. Adib, I just convinced myself 36 is the number. Foolish passions. Love you. Let's look at Costco. Costco here, little bit of a king's bed, little bit of a standard correction. Whenever I see a short-term downtrend against an intermediate uptrend, that just screams to me, get it on a weekly chart. Get it on a weekly chart. See if you can find something on that weekly chart you can anchor against. Too much chop here to anchor. Too much chop here to anchor. And so anchor on the directional side of the equation. I think ultimately here, the opinion might start above 740. I don't see an edge here as of yet from a directional perspective, which means if you are getting, the beautiful thing about knowing directional versus theta, when you truly do understand delta v theta, and you have an opinion on Costco, but you don't have an opinion on the directional side of the equation, you could easily just go to that credit side of the equation and say, you know what? Matt just told me to really kind of anchor against the support level. Well, that $700 seems like a really significant support level that if it ever breaches, it could go down fairly aggressively. Well, let's sell a credit spread right at 700. And if it ever breaches the top level of the credit spread we're selling, then we're just going to get out of the position and never take any risk to the downside there. And so you could easily go to 700. That's right at the 20 delta contracts. Shockingly, I know where 20 delta contracts are in relationship to moving averages. I know. But it's right at that 20 delta contract, and you could easily do a credit spread there. I don't have a directional opinion there. I do have a positive opinion on Costco, honestly. In fact, I'm going to go to Costco tomorrow just to have that positive opinion on Costco. I'm gonna have some of that free, some of those free little snacks they give. In fact, I'm gonna do this on Saturday. We're gonna have a good Saturday day at Costco. That's what me and my daughter, we're gonna do that. Thank you for that one. They're foolish. AMD, AMD is it needs development here. Foolish. It just does. It needs development here. Love AMD. It's a great trading company. It's the second most important AI company right now in terms of the semiconductor conversation. And the stocks outside of NVIDIA, and even NVIDIA is not ready yet. Semiconductors just aren't ready yet. They're just not. Period. End of sentence. Semiconductors are not ready. They've had just amazing runs. Let's let this get dialed in. Let's not force the issue here. Let's let that get dialed in. And if that gets dialed in on a 230 breakout in the semiconductors, fantastic. And if that gets dialed in with a 210, standard correction in semiconductors, fantastic. We certainly are going to be looking bullish. We all know that. So in terms of this, I don't want to fight that. And in terms of AMD, I don't want to fight that. And so you got to let it play out here. You got to let it play out. And again, patience is a position in the market, guys. I want you to write that one down. Patience is a position in the marketplace. You're not sitting on your hands just to sit on your hands. You're not sitting on your hands just to go, say hello to somebody. You're sitting on your hands to make sure that you have the probability edge of success in the financial world. That's why you sit on your hands. You sit on your hands and wait for a better condition, because this game that we call trading that is played out on a microsecond level is actually played out over decades in the marketplace. And so I just feel like patience is a position, or patience plays, however you want to categorize that. I think those are very, very important to let that play out. I feel like some of the biggest mistakes I have made in the market is when I've tried to force my opinion into the market. The market does not care about my opinion. The market does not care about my analysis. The market does not care about anything about me or you. The market is a non-emotional asset class. It does not care about what you're winning or what you're losing. You do. And so wait on better analysis. AMD certainly will do that. But AMD also, I know this company really well. If we're patient here, we wait on the right condition. Yes, we might miss some of it. And yes, if we wait on the right condition, we might get faked out on AMD. There's no doubt about that. But then we catch trends like this too. And they're just so amazing and awesome to behold in the moment, right? You don't have that edge here. You just don't. Now, if you're looking on the bear side of the equation, which I want to, I think there's better opportunities there. But if you are looking on the bear side of the equation, 160 is a very important level for AMD. So keep an eye on 160. That is a very important level for AMD. And then the last one, foolish. You picked the one that is bucking the trend of the semiconductors, and that is Micron here. But Micron was an earnings report from about a month ago, right? In earnings, and I think one thing you'll notice, most people that watch the halftime report understand kind of the secondary conversation regarding earnings. But if you are not familiar with the secondary conversation regarding earnings, oftentimes earnings is the catalyst that propels trend analysis. And within trend analysis, how traders actually navigate trend analysis is the patterns that happen within trends. The general statement is trade the trend, right? Trade the trend, trade the trend. But that's not what you actually trade. You trade the patterns within the trend. And so on an earnings report, such as Micron had recently, and if you're not involved as an investor, you would wait on a secondary pattern. Now, the secondary pattern here that occurred was the high base right here at 120. This is a beautiful high base, by the way. Completely missed it on my side of the equation, but the beautiful high base historically. Breaks out there, that's the trade. That's the high base. That's the breakout. That's the trade. Now, obviously, it kind of just consolidated after that, but that's the signal here. Now, when you're looking at it with fresh eyes, this is all volatility. And that is a double top against the intraday analysis. What does that mean? That means you can't be looking underneath the price action for a potential trade. You would have to be looking at a potential breakout here. And so clean up that breakout. 130 is the handle, and that is rapid fire for today.
Great job, Matt. Great job. Cash Flow Vikings, 7 p.m. Eastern. Cash Flow Club, 8:30 p.m. Eastern. Theta Thursday programming as we head into a Friday. Be sure to catch the halftime report. Those big banks.
And very quickly, if you enjoy what we're doing in terms of rapid fire at the end of every halftime report, guys, I'm enjoying it. I thoroughly enjoy.
I know my brother. He's a very, very happy man.
I do like rapid fires. I do. In fact, I take great pride in this. I still hold the record in how many stocks to analyze in a 10-minute format during the old structure of the coaches show. I analyzed, I believe, 33 stocks in those 10 minutes. I love rapid fire. If you love rapid fire, let's keep doing it every single day. Every single day. You bring me a stock commodity, I'll break it down from a pure technical perspective. And we'll have a lot of we'll have a fun way of getting out of the halftime report every day. And yes, I will get this more dialed in. I haven't been doing rapid fire. I got to work on that speed. I got to work on that speed a little bit. I put the educator hat on a little bit too much in rapid fire, but we'll have some fun, guys. Yeah, it is Adib. It is like the good old days. Me doing rapid fire at the end of shows. I love it.
Will you close on Apple?
Of course.
I just want to look at the chart. It hasn't stopped all freaking interday session long. Yeah, tell me
the got big once you said you were going to buy it.
Listen, Mag 7. Yeah, I think. Anyways, we'll continue talking about it. We talked about it. I want to break that down more thoroughly on the Trading Justice podcast this weekend. But final word. I'm going to give Matt's final word. He loves rapid fire. Show up, give him some things, make him happy. I know he'll be happy with the Masters today. But have a fantastic day, everyone.
Everybody have a great day. Like and share if you love the halftime report. You guys know how to hit us up if you need us for anything. Team at tackletrain.com. Hit us up in our Tackle Train Discord. And if you're looking for an amazing community, go over there to tackletrain.com. Sign up for a free 15-day trial of the pro membership. We'll see you guys tomorrow on the halftime report. Enjoy all the theta cash flow.